Question number 7. On 31st March 2007, the trial balance of TOPA was as follows. Okay, a unique name TOPA. Okay. Before I proceed preparing the final codes for the manufacturing entity, let me finish up the adjustments first of all. The following additional information is available. Raw material, finished goods and semi-finished goods at the year end is given. Raw material being 162, finished goods being 181, work in progress being 78,000 rupees. This is closing. I just note it down here. Salaries and wages unpaid were rupees 9,000 and 20,000. So outstanding wages is there, that should be addable. Outstanding salary should also be addable. The outstanding salary being 9,000 and outstanding wages being 20. Am I right? Right. Machinery to be depreciated by 10% and office furniture by 7.5%. Okay. So the office furniture will be depreciated by 7.5%. Plant and machinery should be depreciated by 10%. I just marking the adjustments here to make the space available, right? That's all. The PDD being 1% on sales. PDD closing being 1% on sales, right? 16,720. Office premises occupy 1/4 the total area. Rent is 60, right? The rent paid for the whole area being 60. Out of that, office premises being 1/4, 15,000. Then the balance may be 45,000, right? 3/4. Balance being related to factory. Lighting is to be charged as 2/3 to factory and 1/3 to office. So lighting charges 13,500. Out of that, 2/3 is for factory and balance 1/3 is for office. 2/3 of 13,500 being 9,000 and 1/3 of which being 4,500. I have marked all the adjustments in the trial balance itself, so I don't want the adjustments anymore. Right. Now I will prepare the manufacturing code. Manufacturing account, trading account, profit and loss account, and finally balance sheet. So we need to have 4 blocks. One extra block we study here is all about manufacturing. Is that okay? Manufacturing. Now balance sheet. We'll finish up posting the stocks here first of all. Raw material, work in progress, finished goods. Among the 3, raw material and work in progress will be posted in the manufacturing account and finished goods will be posted in the trading account. Is that okay? Here, opening stock of raw material being 2,10,000. Opening stock of work in progress being 95,000. Closing stock of raw material as well as work in progress 1,62,000 and 78,000, which is given the adjustment. So 1,62,000 rupees and 78,000. Okay. The finished goods will be posted in the trading account to opening stock to opening stock, the value being 1,55,000. Closing stock should be 1,81,000. 1,81,000. Stocks over. Let's move on to the sundry debtors posted in the asset side. Sundry debtors, the value being 2,40,000. Anyhow, we have provision, right? So I put the value in the inner column minus PDD. Carriage in will be debited to the manufacturing account. The usual items debited in the trading account will appear in the manufacturing account hereafter, right? So carriage in 15,000. BR asset, in the asset side BR, the value being 1,50,000. 1,50,000. Wages and salaries. Wages should be in the debit side of the manufacturing account. 130 plus 20, 150 will be posted in the debit side. The 20 being the outstanding is a liability. I put that value in the liability side. So outstanding wages. The value being 20,000. Salaries will be an item of debit in P&L account. So here salaries. The salary being 1,09,000, 1 lakh, and including outstanding, it is 1,09,000. The outstanding salary will be a liability, will be posted in the liability side. So outstanding salary. This value being 9,000. Telephone and postage will be debited in the P&L account related to the admin expenses, right? So telephone, the value being 10,000. Repairs to plant will be debited in which account? Manufacturing account. Plant, machine, whatever it may be, will be available only in the workshop. So any expenses related to that will be debited to the manufacturing account. So repairs to plant. Repairs, plant, the value being 11,000. Repairs to office furniture. Office will be item of administration, so debited in the P&L account. Repairs to office furniture. Office furniture, the value being 3,500. Purchases should be debited in the P&L, not in the manufacturing account. Usually, we'll debit that in the trading account. When we prepare the manufacturing account, all the usual debit item in the trading will appear in the manufacturing account. Here also the purchase is going to be posted in the purchase manufacturing account. The value being 8,50,000. 8,50,000. Cash at bank, an asset. So bank, the value being 1,70,000. 1,70,000. Plant and machinery, asset. So plant and machinery, P&M, 7 lakhs, depreciation being 10% on that, 70,000. After subtracting the plant and machinery to be posted in the balance sheet being 6 lakhs, 30,000. I request you to post the full value and subtract 70 in the inner column and post it outside. Though I may record only the final value. And depreciation of plant and machinery related to the manufacturing, right? So it will appear in the manufacturing account. Any assets related to the factory and any expenses related to that factory items will be debited only in the manufacturing account. Either repair or rent or lighting, electricity, then depreciation, everything will appear only in the manufacturing account. The value being 70,000. We have office furniture. the value being 1 lakh and depreciation that being 7.5%. So after depreciating 7,500, the final value being 92,500. Very good. Where the depreciation will come? In P&L account, office furniture, no? Depreciation of furniture, office furniture. In P&L account, 7,500. Rent, total 60. 15 is meant for what? Office will come in the P&L account of office. 45 related to the manufacturing will come in the manufacturing account. So rent for factory will be debited in the manufacturing account, 45,000. Rent for office will be debited in the P&L account. Rent for office, the value being 15,000. Then lighting also segregated this way: 9,000 for factory, 4,500 is for office. So the lighting will go to the manufacturing account debit side. So lighting, factory, 9,000 rupees. And lighting in the debit side of P&L account be 4,500. 4,500. General expenses. Come on. Tell me, where will it come? Usually in the case of general will come in the P&L account, right? General expenses in P&L account, the value being 15,000. And in credit balances, sundry creditors, balance sheet, sundry creditors, liability side, the value being 1,50,000. Bills payable also being in the liability side, the value being 75,000. Commission is an income. Where will it come? Come on. P&L account, general income. 4,500 should be in the P&L account. Provision for doubtful debts, PDD. PDD given in the adjustment 16,720 minus PDD given in the trial balance 16,500. The amount debited in the P&L account being 220. Then provision is subtracted from the debtors. Okay. 2,40,000 from there 16,720 is subtracted. Come on, get me the value of debtors here. 2,23,280. We got the debtors here. Capital account. In the balance sheet, capital account liability side 10 lakhs. Sales will come in the trading account. Sales 16,72,000 rupees. Current account of TOPA, where will it come? Balance sheet, liability side. Current account being 85,000. What does it mean? You might have studied in partnership at your +2. Fixed capital and fluctuating capital. In case of fixed capital, the original capital invested will be kept separately as fixed capital. Subsequent years transaction like drawings and further capital, further investment, interest on capital, salary, everything will be routed through another account called current account. Similarly, this is not only for the partnership, it is applicable for sole trader also. In this case, the TOPA being the owner says that I invested 10 lakhs, you keep it separately. Subsequently, I may introduce some additional money or I may withdraw some money also now and then. Or any profit and loss is there also be routed through that current account. Such a way he can maintain a separate account. Here that separate account is available, named as current account. that value being 85,000. And the sale of scrap, where will it come? Manufacturing account. Sale of scrap. Sale of scrap, that value being 25,000. We have posted everything. Come on, finish up tallying the manufacturing account. How much is that? Huh? How much is that? The balance you will be getting here. No. What is the balance? Come on. 11 lakhs 90 being the balancing figure, I think so. Should be transferable to the trading account because this is cost of production. Production is over. Then this is transferable to trading account. Cost of production transferred from manufacturing account. What is the total? Come on. Eleven lakhs 90. What is the total value? No, it's not 12 lakhs 93. Something different number. I think so. 11 lakhs 60. 60,000. 1160. Is it correct? 16,000. 11 lakhs 16,000. Verify this. Already 11 lakhs 19,000 is there in the credit side. How will 12 lakhs 15? 14 lakhs 14 lakhs 50 5,000. Okay, 14 lakhs 55,000. Be careful in that. Okay. Now on tallying the trading account, the balance being 18 lakhs 53,000. 18 lakhs 53,000. You get the GP. Here the GP being 5 lakhs 8,000. I transfer the GP to P&L account 5 lakhs 8,000. 5 lakhs 8,000. If you tally this, 5 lakhs 12,500 and 5 lakhs 12,500, you will be getting the net profit here. Hope the net profit being 3 lakhs 47,780. That will be addable with current account 3 lakhs 47,780. Then current account becomes 4 lakhs 32,780. Get me the total of balance sheet. Yeah. Hope the total being 16 lakhs 86,780. 16 lakhs 86,780. Are you getting this answer finally? We have missed to post the stocks here, these three. Okay, I'll post all these things. Stock of raw material, work in progress, and finished goods. 1,62,000, 78,000, 1,81,000. Is that okay? Is it matching now? Okay.